Okay, I thought I would share with you a decision that I made very recently to change the custodian for my retirement plan because of the way that I invest in that plan, in real estate and in notes and in debt. And so, as backdrop for that, we see here on screen a classic Google search result where Google comes in and they sort of rephrase your question for you and say, is this kind of a good thing? Well, people also ask this question: what triggers UBIT? And the answer that we get is that UBTI is what triggers UBIT. Okay, well, that's very good to know. And what then might be UBTI? Well, UBTI is unrelated business taxable income. Unrelated business taxable income. Remember, we're talking about a retirement plan that's supposed to be tax-free. And all of a sudden, we're talking about unrelated business taxable income. And UBIT, of course, is unrelated business income tax. It's the tax on that taxable income. So the reason that I got onto this topic pretty recently is that I bought a property inside of a retirement account. In this particular case, you can see pictured here. It's a very humble house on a very interesting lot. So you can see the house here is backed up against some, I live in Arizona, as you might guess. So it's backed up against some land that will never be developed. And you can see here the front of the house where I've scraped another part of the property. And the reason that I did that is you can see the shape of the property is kind of like let's call it a boot. So it's got this long triangle that connects over to another street over here on the right. And, the house is actually here, and it's got this other extension to the top. So what I realized when I bought the house is that I had enough land here, and that's why I scraped it, that I could create two lots and sell off those two lots. So I bought the property for $200,000. These two lots will sell each for between $50,000 and $80,000. Let's call it $55,000 each. So I'll get about, conservatively half of my investment back just by creating these two lots and then selling them. And then I get to work on this triangular portion. So I go ahead and it needs a major upgrade, this house, but it's worth it because it's on a very large tract of land, almost 2 acres, that's backed up against, as I said, property that will never be developed. So people will really want to live there. They're going to have a very nice view. This is sort of the view out their backyard or, out. And then looking to the left, oh, that's your land. So this is what got me thinking about, of course, I may have mentioned that I bought this cash and I'm going to be doing all of the improvements cash. But what if I had wanted to finance all or a portion of that? So, here we can see another result on the internet talking again about UBIT and stating again unrelated business income is income from a trade or business regular. What's going on here, at least ostensibly, is that they're worried about, what if somebody were to use their self-directed retirement account to open up a coffee shop right next to Starbucks? Well, they would have a tax advantage. Poor Starbucks would not be able to compete as well. So let's protect Starbucks from that and create this UBIT tax. Okay, that's the concept. Now, let's get off of the internet because I can tell you what, I wasted much time going down many rabbit holes in places like Bigger Pockets, trying to figure all this stuff out. And, the simple is just to go to the IRS. Here we can see IRS publication 598, the most recent version, and it's talking about organizations subject to this tax. And here you can see, blown up. In addition, the following are subject to the tax on unrelated business income. Oh, individual retirement accounts, Roth IRAs, etc. So this is the background. This is the reason why I was concerned about my tax advantage that I was supposed to have. What a slap in the face. You put your money into a retirement account in order to be tax-free and then get hit with a very significant tax. So there's another way of going about that I have gradually become more and more aware of. This is a book that you can find on Amazon, the QRP book. I got that, and in the meantime, I actually now know Damien. I was trading email with him yesterday to make sure that I have my facts straight. I understand a little bit about what I'm talking about. By the way, if this seems interesting to you, this topic, let me know on email or in chat on the on the video link, and I could probably set up a web call live with Damien where you might have an opportunity to have him answer the questions, because I myself am not a CPA and I don't even play one on television. So hey, take what I say with a grain of salt. It's what I came up with for my own self. But the thing that caught my eye here in relation to this topic was that we're in a different part of the tax code. So that whole problem that was described is related to Section 408 of the tax code. So if we move our retirement into another section, a qualified retirement plan that's dictated by another section of the tax code, that's the reason why we can avoid this tax. So I won't try to unpack that topic any further because I'm not the expert. Damien and many others are. And as I said, if you'd like to get a video where we can ask him, I'd be happy to do that. By the way, I did reach out to him explicitly on email yesterday and got an email back stating, an EQRP is exempt from UBIT with any amount of leverage. In one sentence, clear and simple. So those are the words of Damien being quoted here on screen. So this, although that's interesting and I love to avoid tax, I confess that the decision to change the retirement custodian is not an easy one. There's a lot of stickiness. I mean, getting everything set up, what's going to happen? Am I going to, what? I've got some assets that are held there. What happens if can I move the asset over? I've got many notes that are in there. Oh my goodness, it'll be so much hassle for me. So that is in the background noise in my head when I was making that decision. It was a little bit easier for me because I was a little bit disgruntled with my current retirement administrator, which I won't mention. It was a very reputable company. But somewhere around February of last year, they changed a lot. And now whenever I call them, ever since, I get a recording that says, basically, in order to protect the health and well-being of our employees, we've decided to increase our profits and completely shut down our customer service desk and degrade our customer service experience. And we've decided that once we started that, even though things have opened up now, we'll continue with it that way for the foreseeable future. So it's become very difficult for me to work with that particular custodian. I leave a message, and 2 days later, somebody sends an email. My goodness. So that made it a little bit easier for me. By the way, in regard to EQRP, you can see these many other benefits that are listed here. There's the first one is this avoiding this tax, but there's some others. contribution limits 10 times higher than with an IRA. Okay, so all this is pretty interesting stuff. So those are 11 reasons from the EQRP downloadable book. Some of them caught my eye, some of them didn't, but I propose reason number 12. So reason number 12, what's in a name? So I made what I consider to be kind of a decision that I ended up regretting, where I had created a name in the past of my account with the LLC name that clearly showed that it was a retirement account with even my name on it. This was the name of the LLC, Vantage SD IRA FBO James Griffin LLC. Wow. So it was like very explicit that it is a retirement account. In fact, when I spoke to EQRP initially, what they wanted to use as the name, this is their default naming convention, was James Griffin EQRP 401k. It's like, oh my goodness, here we go again. But they were very flexible, and so they agreed to use a name that is less explicitly a retirement account and without my name on it. So what I ended up using when I set this up was Sand Hill Equity Trust. And there are a couple of other very experienced investors that I personally know that do a lot of work inside of retirement accounts, and they also don't like for the name to explicitly show that it's a retirement account. Nobody needs to know that. So this is my benefit number 12, my ability to get out of this name and move to a more generic name. Okay, well, I hope you found that to be interesting, and let me know any feedback, and I'll talk to you later. Bye for now.